This is Alan Bush with the Daily Financial Forecast for Thursday, March 22nd. In the stock index futures, there was a very sharp gain just after yesterday's announcement from the Fed that most likely they would be increasing rates a total of 3 times this year and not the 4 that some analysts had anticipated. That rally very quickly fizzling out as traders quickly refocusing their attention to the trade issues. So the 200-point gain that we saw in the Dow quickly evaporating, futures across the board working lower and actually closing lower with follow-through weakness this morning. Of course, today we will have the administration's announcement on trade tariffs with China. It appears that this press conference will start at 11:30 Central Time, so that's a little bit earlier than expected. So in advance of this press conference, stock indices will probably remain weak. Once the statement or conference is out of the way, I think the indices can rally. Also in the currencies, the dollar index very much coming under quite a bit of pressure with the Fed statement yesterday. It continues to trade lower overall today again, while the euro currency advancing for the same reason. Still thinking longer term that the dollar will generally weaken while the euro currency will advance, with that double top pattern looming above the market in the euro currency that I think ultimately will be taken out. Interest rate markets very quickly rallying with the Fed statement yesterday. Higher prices again today as some flight to quality buying coming in advance of the press conference once again at 11:30 Central Time. Credit markets will probably remain firm until then. And I think once the press conference is out of the way, lower prices are likely for all of the credit futures markets. And longer term, it still appears that the main trend is lower. Gold futures yesterday quickly advancing, is at one point $24 higher on the Fed statement. By the way, there are a lot of analysts that thought that the statement was a bit hawkish on balance. I do not think that it was. It was just a little less hawkish. All of the financial markets responded as if it was not as hawkish as some had anticipated. But once again, it's the trade tensions coming back into focus in today's trade. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADM Investor or Archer Daniels Midland.